I'd like to say greetings, everybody. Good morning, good afternoon, good evening from wherever you're tuning in. We're actually broadcasting from all the corners of the world for this seminar. My name is Christopher Chen, head of InvestHK for Canada. InvestHK is a bureau of the Hong Kong government responsible for foreign direct investment and trade. As a representative of the Hong Kong government, I'd like to state as a backgrounder that Hong Kong is both a major international financial center whose history of financial services stretches all the way back to the 1960s and 70s. But for many of you that may not know, Hong Kong is also now a major key city in the Greater Bay Area, a super economic region conglomeration of about 12 cities centering around the Pearl River Delta, with a GDP about 13 trillion USD, as well as 70 million population, which basically puts it on par with a developed nation. The FinTech movement in Hong Kong is one of the strategic initiatives of the Hong Kong government and has been driven predominantly by e-payments, wealth tech, and blockchain. InvestHK brings to the table a number of new initiatives to help spur that growth and help Hong Kong become the FinTech center of Asia Pacific. So we will be sharing those updates today, as well as some updates by the Hong Kong Monetary Authority. Hong Kong is a deep market on the rise with a number of financial institutions and FinTech startups. My colleague will share that with you today. And Hong Kong's FinTech industry, as well as financial services industry, has weathered the COVID-19 crisis and bucked the global trend in terms of companies growing and expanding from the region. Today's seminar is to illustrate the growth of the FinTech market opportunity in both Hong Kong as well as Canada, with intent of showing the linkages between the two jurisdictions. Joining me today in the order of presentation, as well as on the panel, are my esteemed guests. First off is Michael Komarski, Senior Manager FinTech for InvestHK, based out of San Francisco. Jean-Luc Gustave, Head of Asia, Global Digital Assets for the GDA Capital Group, a company from Montreal now operating in Hong Kong that connects the international capital markets with blockchain. Elizabeth Late, the Managing Partner for the Holt FinTech Accelerator out of Montreal, providing deals between FinTech startups and corporate clients and investors. And Frederick Pai, Executive Chairman and Chief Executive Officer for 3IQ Group, Canada's largest digital asset fund manager. And Frederick is broadcasting from Spain, so he truly makes this a global broadcast. So before we get started with the first presenter, I want to state some housekeeping rules. If you have any questions, please don't broadcast immediately. Please put them into the Q&A or chat, and we will be sure to include them during the panel. So at this point, I would like to give it to our first presenter, which is Michael Komarski of InvestHK.
Good morning, everyone. Good afternoon, everyone. I would like to extend a warm welcome to everyone who's considering setting up in Hong Kong, setting up their operations. And yeah, Hong Kong welcomes all innovative companies that are looking to make a positive impact into financial health of individuals and efficiency of financial markets. And that also extends into blockchain and digital assets. It's very important because the Hong Kong government sees FinTech as the strategic sector that's one of the main pillars of the future growth of Hong Kong. Within that, of course, blockchain plays a very important role. Since at least 2016, government has been laying down foundations to support companies that are looking to establish themselves within that space. My position, my role is part of that. In 2016, the government decided to put envoys outside of Hong Kong to talk to companies and to support them in understanding how they can operate in Hong Kong, what are the benefits of setting up in Asia, and how to do it in the most efficient way possible. So if after this presentation you have any questions about your business model versus the fit in Hong Kong market, or if you have any other follow-up questions about governmental funding towards fintechs, both Chris and myself will be happy to address them. Now, in terms of the Hong Kong fintech ecosystem, and more specifically blockchain ecosystem, we have seen a huge explosion of blockchain and digital assets related companies since 2016. Of course, that stems from the fact that Hong Kong is both a huge and very important port, and that's where blockchain is very crucial in terms of use cases. And of course, it's also a very important financial services center. And so specifically within that, companies looking to apply blockchain into financial services are operating. As Invest Hong Kong, we worked with a number of companies from overseas looking to set up in Hong Kong. And those are such household, I would say, digital assets names as Consensus, R3. And outside of the financial space, thinking of blockchain applications and blockchain uses, you can think of one of the companies that recently became I would say, maybe not a household name, but made a name for themselves in terms of grabbing headlines, was Animoca Brands, a company that recently achieved a unicorn status, and it operates within the blockchain gaming space. Lastly, in terms of the newest developments, actually 2 days ago, right in time for our webinar, the Hong Kong Monetary Authority, which is one of the 3 regulators in Hong Kong, announced its FinTech 2025 strategy, which revolves around 5 pillars. And I will be happy to send the link, maybe share here on the group, link outlining all the pillars. Out of the 5 pillars, at least 2 are directly connected with blockchain. One of them points into Hong Kong digital proofing for the central bank digital currencies, and shows government's commitment into working in that space, specifically exploring setting up the e-Hong Kong dollar facility, as well as it looks into improving Hong Kong's digital infrastructure so it can support blockchain-related projects. So having said that, again, I would like to extend a very warm welcome to anyone that's considering setting up in Hong Kong. We will be happy to help you along the way. And after that, I would like to leave the floor to others and then address your questions later.
Thank you, Michael. At this point, I'd like to hand over the stage to Jean-Luc Gustave of GDA Capital.
Sure. Hi, everybody. So a few minutes about us, about what we do. So I always like to start by saying that I'm from Paris. I've been living in Hong Kong for almost 10 years now, in various capacities, but always connected to the tech and fintech world. And now I'm heading operations for GDA Capital. We are global financial institutions operating essentially in the crypto space. We do have offices in Toronto, Montreal, New York City, London, Dubai, and now Hong Kong. Briefly, from our original focus, which is the brokerage and the trading desk in Canada in the crypto space, we are now moving forward to further verticals and geographies that include fund management, venture capital, family offices, tech advisory, crypto lending, venture capital. For those who are into that, we are also building the largest NFT ecosystem in the world. So basically, I'm setting up operations in Asia for the company solidifying our relationships with local funds, banks, collaborating with tech projects in the region. But the team is growing from Hong Kong with obviously a very close eye on mainland China. And I'm much more than happy to describe all the assistance and the precious contribution Invest Hong Kong had from the beginning and still continue to have now in the expansion of GDA in the region, especially from Hong Kong. Thank you.
Thank you, Jean-Luc. At this stage, we're going to shift from Asia Pacific to back to Canada. So next on board is Elizabeth Late from the Holt FinTech Accelerator in Montreal.
There we go. Good morning, Christopher. Thank you so much. It's a pleasure to be here this morning and supporting Invest Hong Kong. Certainly look forward to wonderful collaborative opportunities. I always believe a picture is worth 1,000 words, and so I'll jump right into that. Just to give an overview. So Holt Accelerator recently rebranded as Holt Exchange to reflect our global, exchange within our advisory network. Today, we currently scout roughly 10,000 fintechs on a regular basis across the world. We receive on average we're averaging about 700 applications into our program. We review those applications with our advisory network, basically for fit into the North American market. We have corporate partners on board, and so we specifically target really two areas, looking for in our investment network also specific fund theses as well as specific technology theses. Through there, we review those companies with roughly 125 advisors and pull them through into our program where we'll make first investments and then follow on generally up to Series A. We have 27 companies in our portfolio today, cutting across 9 countries. The Holt Exchange is funded by the anchor funded in terms of our Fund 1 by the Holden Family Office, which has a great Canadian history. They're the 5th generation family of Sir Herbert Holt. Sir Herbert Holt was probably one of renowned Canadian industrialists, founder of what is known as Hydro-Quebec today, as well as the longest running chairman of the Royal Bank of Canada for over 35 years and increased assets of the bank by about 14x during that tenure. I'm excited to be here today. We have not made an investment yet in a Hong Kong fintech, have certainly circled some, and we've seen some great opportunities coming out of there, and look forward to this discussion, especially for opportunities for our portfolio companies moving into the Hong Kong market. Thank you.
Thank you, Elizabeth. The last presenter is Frederick Pai, the Executive Chairman and Chief Executive Officer of 3iQ Corporation. Frederick, room is yours.
Hi, great, thanks. Thanks for having me, Chris, and I look forward to the rest of this discussion. But a quick introduction on 3iQ. 3iQ recognized very early, the potential of blockchain and the related digital assets and the way that businesses can move forward and expand. And at the time, we were wondering, there are a number of different ways to invest in this growing technology, and it'll either be through venture capital, it's going to either be in through direct investing in some of the tokens themselves. But we went on the quest to be able to create a regulated, publicly listed series of funds that will give the average investor access to these digital assets. And what we've done in Canada is it took us about 4.5 years of working with the regulators to be able to create this kind of a project. And so since that project got going, where we won with the Ontario Securities Commission, we have since looked at expanding that to other markets in the world, of which Hong Kong is high up on our list.
Okay. Thank you, Ferric. So at this stage, we'd like to open up the panel discussion in terms of certain issues that are crucial to each one of your organizations. I'd like to posit a number of topics. So I'd just like to follow up with what Elizabeth was saying. Granted that at the moment you don't have any portfolio companies active in the Hong Kong area, as somebody who's not there and is watching it from the outside, what aspect of the fintech industry in Hong Kong do you see opportunities in your portfolio?
Thank you, Christopher. Great question. I think when I look at the Hong Kong market, and certainly I would say as a landing point to access mainland China, really on two areas where we look, a number of our portfolio companies are serving the underbanked. I think there's roughly 225 million underbanked available in terms of an opportunity. We look at alternative credit scoring, multiple different elements in terms of being able to provide payment services to that group. I think the other thing is, if I look at Hong Kong, certainly is taking a lead. I believe the government issued roughly 8 full digital banking licenses, where I consider kind of the neobank starting up, a great opportunity for technology there. I think on both sides, I think, certainly some of the digital technology coming out of Hong Kong and its relevance to the North American market. I think there's a beautiful bridge to happen. As I said, we came very close to making some investments out of Hong Kong. We're working our way towards that. And then, of course, for me, I'm previously out of the 3D tech industry, and where I look at, my favorite company in the world, Hanson Robotics, big fan of Sophia. And the future is really about serving our digital selves, and certainly the pandemic has accelerated that. And I think in future, as we really become these digital beings that are interacting with our financial institutions, looking at what's happening in the area of artificial intelligence and really natural language processing. And I certainly think the developments and the ecosystem that's being built around Hanson Labs definitely put Hong Kong in a lead there to look at that research.
Thank you, Elizabeth. Actually, I'd like to ask both Michael and Jean-Luc to counter that point, because basically the two of you do represent Hong Kong for the purposes of this panel. In terms of your side, what type of companies do you think the Hong Kong fintech scene would like to see enter its ecosystem? And do you actually think that some type of fintech stand a better chance of survival than others right now?
Is that a question to me or Jean-Luc?
Both of you, actually.
I think maybe I'll start and let Jean-Luc, given that Jean-Luc is based in Hong Kong, counter me or hopefully agree with me. Within blockchain space, Hong Kong specifically welcomes fintech enablers. So companies that are looking to make existing financial infrastructure operate more efficiently. And within that space, specifically companies that are looking to become digital assets custodians or in any other way enable the fintech ecosystem to mature up. It has to do with the fact that regulators, while very supportive of innovation, are not necessarily always enacting the latest legislation. The regulator usually implements wait-and-see approach in those cases. And so what we see is that custodians and companies that are focusing on enabling digital assets operation are doing particularly well. Now, I'm open for Jean-Luc to either agree or disagree with me.
No, I could only agree, Michal. I mean, the Hong Kong ecosystem is not perfect. However, I would say that having been interacting with this ecosystem, and especially with the main stakeholders in the public sectors, including regulators, I mean, everybody give them credit for at least trying really hard, being extremely helpful, being extremely informed. Probably, I would say, I mean, in my position of being able to compare, and as a lawyer myself, the two systems between, say, France and Hong Kong, I find the Hong Kong regulators, for example, SFC or HKMA, extremely well informed. They are on top of things, and I would say, again, it's not a perfect ecosystem. There is always this comparison between Hong Kong and Singapore. I mean, that always existed, and that will probably always be a kind of friendly competition that we will have here. But basically, if you are a company, you are into innovation, you are into disruptive technologies applied to real life problem solving, especially if you're into blockchain, into wealth tech, into artificial intelligence, into robotics. Elizabeth mentioned Hanson. Hong Kong is definitely a great place for you. I mean, I don't know if I have the time to get a little bit further in details on that, but yeah, I have to say my conversations with SFC, HKMA, the insurance regulator, the Custom and Excise Commissions for money services regulators have been anything but very, very positive. Now we do have the FinTech team in Hong Kong at the government level. We do have now also something that is very, very important for us, which is the FOHK, Family Office Hong Kong, because Hong Kong is really pushing hard to establish this place as the family office hub for the region. And this is something that is extremely interesting for us as a service provider of tech and crypto-related investment opportunities for this particular class of investors. So yeah, Hong Kong is again extremely helpful. Invest Hong Kong, you guys, we've been working with you from the very beginning on big and small things. So yeah, it's a place to be if you're serious about investing into innovation, definitely.
You touched on, both of you touched on the regulators, and that's actually one of the core aspects of setting up any type of fintech, mostly because the target audience tends to be financial services types of companies. So I'm going to redirect this back to the Canada side, both for Elizabeth as well as for Frederick. In terms of working with regulators, what would you say is the environment, the regulatory environment for new Canadian fintech companies? What are the major concerns for regulators in, say, for example, approving a Bitcoin investment fund? So that's both for Elizabeth and Frederick. What's your take on the regulatory environment?
Definitely for us, you know, it was a 5-year discussion with the Canadian regulators to get a product, and it really boiled down to some very simple things, you know, and we're just tired of hearing people saying, oh, we like blockchain, we like fintech, we don't like Bitcoin. And you have, you know, people, when they start to learn that the Bitcoin blockchain is the first blockchain, it is the, you know, the gold standard of what it was. We had to challenge the regulators that it, you know, the regulators in Canada actually have rules that are to specifically fast track new technologies and new technology development, which included the whole blockchain thing. So we had to argue that you can't have one without the other. And I think that that's our message that we're trying to bring around the world. You know, we're sitting there saying, well, we'd like to bring, you know, a Bitcoin fund into Hong Kong. Well, you know, the secure value transfer protocol, which is an internet protocol, which allows you to securely transfer ownership value, title, or money, is also known as the blockchain. And the first one was the Bitcoin blockchain. So if Hong Kong is going to, you know, delve deep into blockchain development, allowing their investors to actually invest in the underlying tokens is a very important key component. So right now, our challenge will be to Hong Kong is show them what we did in Canada, and say, you know, it's kind of, you have to take the first step. You know, you don't buy, you know, the gold mining company until you've bought gold, and then, you know, you don't buy the technology companies behind the manufacturing until you have bought the original, you know, you have to believe in the underlying thesis. So it's very much an educational component, and it tends to be that the regulators are in their 60s and the entrepreneurs are in their 30s and 40s. And so there's a big gap there, and bridging that educational gap can be a challenge, and that's really what we try to do.
Thank you. Elizabeth, what's your take on the regulators?
Well, I think rather interesting phenomena happened during the pandemic in the distribution of funds on a worldwide basis from governments. And I think, you know, the elasticity, and I'm not sure whether you're 30 or 60, the elasticity of the mind to be able to think about that. I think since then we've had almost 9 countries, including China, issue underlying digital currencies. And I think that is going to push that next level in terms of regulation around that. You know, part of it, I'm not sure it's an ageism thing or a perspective from looking at it. There is also, you know, the underlying banking structure, which is, you know, very strong political alliance that is associated with that, and understanding the impact of how those digital currencies are going to mix between the two, right? So as we either unpeg from the dollar or peg onto gold or peg onto a new digital currency, I think that's going to be an interesting process. Most important was, if I looked at the trillions of dollars that flowed through government systems in order to provide aid packages, a significant portion of that fell off very sharp cliffs. I think some very ragged exposed edges were shown in terms of our distribution systems that could be resolved through the underlying of digital currencies. And I think that's really one of the biggest drivers on what you're going to see next is cost effective. I mean, even amazing in terms of the US government issuing, I don't know what you call them, the aid packages through credit card, payment cards, which allowed the underbanked as well as the unbanked in order to be able to have access to those aid packages. So I see those really as drivers to what's going to be impacting our legislative agenda forward. And certainly the cost saving of a movement towards a digital currency is going to be significant for governments to review.
Thank you. Elizabeth, you had mentioned government aid, government support. I'm going to throw this back at the Hong Kong side. In terms of government aid and support for fintechs, particularly in this rough period, you know, we don't know when this period is going to end. We don't know. You know, the sun looks like it's back on the horizon, but in terms of government aid and support for fintechs, is there anything you can share that's new for the audience, Michael?
So I would say that there has been a number of fintech-related aid programs and initiatives, but I think where I would like to direct the attention is really the existing infrastructure that supports companies looking to enter Hong Kong. Specifically 2 stakeholders, and we are happy to put companies in touch with them to explore opportunities. Number 1 would be Hong Kong Science and Technology Park, which is the main R&D institution within Hong Kong ecosystem. It has a number of support programs for both companies that are looking for incubation, acceleration, and also exporting abroad from Hong Kong. As well as Cyberport, which is a public-private partnership established a couple of years ago as the main hub for innovation in Hong Kong. So those are the two main actors that can support companies that are looking to get some financial help to operate in Hong Kong. Apart from that, one of the existing programs that has been operating really well and delivering tangible results is the tech voucher program, in which government basically gives grants to not you as a company, but your vendors. So if someone wants to buy from you your product, you can apply for a grant for your client, so the government can kind of foot the bill. So those are the main things I would point you to direction. Unless Chris, there's any other specific programs you want me to expand on?
No, but it touches on a very pertinent question, and this is for Jean-Luc. In light of government support or private sector support, I assume those were considerations, but I assume that that wasn't the whole picture. Why did GDA pick Hong Kong? Why of all places in the world? Why did you pick Hong Kong as your next office? And I suppose this is pointed towards also Elizabeth and Frederick to another thing. Why do you keep Hong Kong in your considerations, and as opposed to why you wouldn't?
The way I would answer that is by saying that usually we keep using this word ecosystem, all right? And I want to say that in Hong Kong, this notion of ecosystem actually exists. That's really my point. I mean, between Invest Hong Kong, Cyberport, Science Park, all the different accelerators available, the incubators program. I mean, it's just a place that is not very big, as you know, but where you do have everything available to help you. And as I was saying, for big and small things. Basically, Hong Kong is a place where you can literally create a rep office in a matter of hours. So basically, you just have to go to Admiralty at the registry, at the company registry. You have a document, you fill it, you sign it, and off you go. You're ready to run your business in Hong Kong in a compliant and legal way in a matter of days, literally. So basically, when you have all of this and you have direct access to people, to individuals, basically it makes a lot of difference. I mean, let me give you a very mundane example, but it matters. All right, you go to any public service in Hong Kong, and it's a real example. You have one thing that is missing, a document that is missing. In my country, you would have to expect a letter that would take maybe 2 weeks to be sent to you. Then you would have to send back the missing document. So you have another 2 weeks. All right. So basically, you just lost a month in the process. In Hong Kong, you have Miss Chan, who would call you directly and who would tell you, listen, I know this is important for you. This document is missing. Can you please come to my office right now to give it to me, sign it, and off you go. I mean, you have the name of a person and a direct phone number. I know it's a very mundane thing, but it matters, right? When you start your operation in a place like Hong Kong, and you have so many other things to take care of. So yeah, so it's just an example, but it's very important. And I also want to say that Hong Kong is not just a place of, you don't come to Hong Kong just for Hong Kong. That's my point. You come to Hong Kong for Hong Kong, obviously, for the FinTech ecosystem, innovation, etc. But you also come to Hong Kong because Hong Kong is a model for the rest of the world. Hong Kong is a great platform to operate from and build partnership from here to the rest of the world. So you come also to Hong Kong because of the connections that you can build with Middle East, with Africa, with China mainland, obviously, with the rest of Asia, Southeast Asia, etc., etc. So it's a great place. It's a hub. It's a great place for connectivity, where you can meet with people from all over the world, and everybody is going, in the same direction toward the same objective.
Thank you.
I'll pick up from there and talk about that connectivity, because one of the objectives of 3IQ and the Bitcoin Fund is to, have the largest Bitcoin fund in the world that trades 24 hours a day. And the beauty about Hong Kong and Canada is their coasts aren't that far apart, and between the Canadian markets closing and the markets opening up in Hong Kong, we are listing in Dubai and also looking in Europe at Sweden. But then the other major markets, both New York and London, we think Hong Kong has an opportunity here to take a leadership in the global exchange, in the global exchanges, be able to open up the gateway for the simplest of all fintech investments, which is buying, Bitcoin or Ether. And so I agree with Jean-Luc. It is a gateway. It's a gateway where everybody in the Far East has access to the Hong Kong stock market. It's recognized as a global leader. It is one of the top 5 in the world. So we'd love to see, see some support. We just have to use the experiences we've had in Canada to get that support in Hong Kong.
Also, a really strong point for me is Hong Kong has always been a financial hub in the world. I don't look at fintech. I look at technology for finance. And I think where I look, and part of that requires experienced people understanding current financial systems and structures in order to be able to know how best to leverage technology to improve upon that. I think the companies that we've looked at of Hong Kong are mostly very senior individuals migrating out of standard financial services industry into the technology industry, because they clearly understand the problem that needs to be solved. And very different than I guess younger, less experienced entrepreneurs, there is a significant benefit to having 20 to 30 years experience of saying, I very clearly understand where the issue is and how it's going to fit within the existing structure in order to really innovate and disrupt it. So that's been a key for us to look at.
Thank you. I think everyone just mentioned one of the core aspects of the Hong Kong fintech market, or actually fintech market in general globally, and that is actually China. And so this is a question for all 4 of you. In your opinion, what's the impact of the growing integration of Hong Kong and the overall mainland China fintech growth, such as subjects like a central bank digital currency? You mentioned, China is one of the countries that actually created one. In terms of, China's blockchain strategy, China's e-payment strategy. What's your take?
I'll jump in and
I don't
say,
mind. Yeah.
Sorry, go ahead, Fred.
Okay. Yeah, no, I agree. It's fun. It's interesting to see the leadership of China, going with the digital currency. The reason for digital currency is mobility and portability and instantaneous, instantaneous movement of money at a very low cost, if any. And that's coming from a country with currency control. Clearly, that hub has to come out of Hong Kong. Hong Kong is a global player. Hong Kong is a center for Forex trading, and some of the biggest volumes are done out of Hong Kong, and obviously the relationship with London, the London markets. If they're going to continue to maintain that leadership, they're going to have to embrace all digital fiat currencies. So you will have digital Canadian dollars, digital US dollars, digital British pounds, sterling, digital euros, and certainly digital RMB. And and Hong Kong dollars. So it's going to happen. Like, and they have two choices: either watch the world do it without them, or be a leader in making all of that happen.
Yeah, I think to that point in answering your question, we were having a quick discussion before on Fred's sailing adventures. Slightly a little bit like the Bermuda Triangle in terms of perspective on establishing in Hong Kong, leveraging the mainland China market, as well as, you know, I mean, China is so far ahead in terms of digital finance, probably farthest in the world, right? And how does that integrate? So I think a lot of companies are sometimes trepidatious on saying, where will be that opportunity for me if I go over there? But in previous lives and looking at companies, and we outsourced a lot of development to different areas of the world. And I think if you're trying to create a global unicorn, you need to understand all cultural perspectives. And I think it still goes back to understanding your digital self. So I do believe that, more assimilation of ideas on how we serve people in the digital world and how we evolve the requirements for our digital currencies, still Hong Kong is a great opportunity to be a middle player in bringing East and West together.
Yeah, to Elizabeth's point, and I think that's something that might not be very tangible if you look at numbers and stats, which all are kind of in favor of Hong Kong in terms of a great place for doing business. But Hong Kong does bring this flavor of East meeting West. And for people like myself that don't speak Cantonese, I'm able to successfully advise companies on setting up in Hong Kong. I don't think I would be able to do that with many other geographies. With Hong Kong, it is possible to do business and learn Asia from Hong Kong. And having said that, the further integration helps to tap into the bigger market than just Hong Kong. Hong Kong on its own, especially for financial services, it is attractive, particularly for the companies that are looking into B2B space, given the huge number of financial services applications. But at the same time, definitely having access to a much larger market and also a fast-moving one can only be beneficial.
Yeah, I mean, to your question, Chris, what is the impact on Hong Kong of the overall mainland China strategy? I would say, I would just say the impact is absolutely huge. When you live in Hong Kong, I mean, you just have to travel maybe 30 minutes. You pass the frontier with China, and then you have access to Alibaba and Tencent and Xiaomi and Baidu and Yinghan, etc. And literally, when you go to Shenzhen and you visit those companies, I guarantee you, I mean, I would definitely encourage anybody who haven't done it yet to do it. You really feel like you are just projected in 20 years from now. It's absolutely amazing. But even in Hong Kong, we also have the benefit of this incredible innovation with, for example, the 8 virtual banks that Elizabeth was mentioning earlier, which is, I mean, just this is a revolution in the way customers will be able to access something as simple as banking services on an app. So it's absolutely gigantic. The Belt and Road Initiative, which is connected to that, obviously, which is an incredible project that connecting Eurasia, Africa, Oceania, from land and from a maritime road, is also an example of this strategy from China, mainland China, where Hong Kong can have all its place. You mentioned in your introduction, you mentioned the FinTech 2025 plan that was announced by HMA. when you look at the details of what was announced, is quite interesting. I don't want to mention the 5 different points. We don't have the time, but just a few key things. The first point is, and I quote the HKMA statement: all banks go fintech. All banks go fintech. That's exactly what they're saying. So basically, it's a plan by which they are announcing that they are going to do whatever it takes, whatever is necessary to encourage banks to digitize their operation from front end to back end, and even the supervision of the banks from the regulator will be digitized as well. CBDC is part of this plan. Hong Kong has announced officially their plan to issue an Hong Kong dollar very soon. So this is also going to be a project that will be led by HKMA in terms of benefits and related risk, and that goes all the way to training, because obviously Hong Kong is very much aware that we are going to attract and train new talent. So basically, this tremendous move at the Chinese level is having some repercussions in Hong Kong, and for all companies, Hong Kongese or not, which are part of this ecosystem.
So this will be the last question, and this is for all 4 of you. You know, fintech is the big trend, the big sector trend, the big buzzword for 2021. And despite all the initiatives, despite all the movements, what do you think is the biggest barriers for growth for fintech as a whole? You know, what's stopping it from really taking its full potential?
I'll say regulation. And I do think, you know, very much to Fred's point, is clearly understanding the disruption to the system that can happen. Certainly banks in Canada have been embracing financial technology as well as in the US, but not to, you know, I grew up watching the disruption in the manufacturing industry, which, you know, as it was automated, significantly changed labor elements across that industry. I don't think, you know, the banking is at the tip of it. As I said, those regulations are really sometimes driven by large financial institutions having put strong sway, as, you know, trying to figure how they're going to ingest the disruption that this technology is going to bring to their existing business models. And that's a lot of reallocation of people. You know, I certainly understand the, I'm going to say, trepidation in changing those regulations without fully understanding. You know, if you go through, you know, most of the manufacturing towns in the automotive industry in the US, they're decimated. If we look at the impact of the hundreds of thousands of people working in financial services today, that is going to be a massive disruption. And I think they're just in a very strong point in order to be able to slow that down potentially, in order to look to say how to manage that disruption over time.
If I might sort of piggyback a little bit on Elizabeth's points, in terms of regulation, at least in as far as Hong Kong goes, we have it covered in one aspect, and I think it's worth mentioning. For the companies that are wondering whether their business model is legal and applicable to Hong Kong, all the regulators, all 3 regulatory bodies have the supervisory chat rooms. So basically, they do have chief fintech officers and people that are tasked with understanding your business model and seeing whether you're good to go and whether you can operate in Hong Kong. And very briefly, from my perspective, what is a big obstacle, and it's a super new and very related to the pandemic, as I would say moving business to Zoom can be an obstacle, in a sense that in a way we are all closer to each other than we've ever been. You can see the inside of my apartment, so it seems very kind of we are all together and we are talking to each other. But at the same time, as far as financial services go, if you're selling to banks, banks are still a very conservative entities, and they should be. You know, they are dealing with money, and so it takes a while to actually sell a product to a bank or to anyone else that operates someone else's money. And for that, in many cases, and especially in Hong Kong, you should be actually based in the geography of the bank, of your client. Therefore, it might seem that it's very easy to kind of connect with each other to get that Zoom connection, regardless whether you're in Montreal or whether you are in San Francisco. But really, moving forward, you should consider having your local presence. I mean, there is a reason why Jean-Luc is based in Hong Kong, not in his living room in Montreal. And so we certainly encourage companies to start having those business conversations now, but consider really having at least one person based in Hong Kong to kickstart that process when the world comes back to normal.
I would just answer to your question by saying it's just the time once the technology is available for the incumbents to adapt and adjust, and that takes time. It has nothing to do with technology. It's the time to adapt and adjust. And I would even say, if I want to be a little bit provocative, it's adapt, adjust, or perish. And when you look at the disruption that is, the wave that is actually coming on us, or maybe it's already there, and when you think about how this wave is going to impact profoundly the business models and the revenue models of the incumbent players, you understand why it's something that is taken very seriously because of the impact that it can have on their bottom line, but also on their staff, on their talents. And when you look at, I don't know, virtual banks, we all in Hong Kong now, we are clients to 2 or 3 virtual banks on top of our regular bank account with, the iconic Hong Kong bank that I won't name here. And basically you start with the virtual banks for the first month, and then gradually you're going to move your money to them more and more and more. And there is a reason for that, because it's faster, it's cheaper, it's better. The user experience is just fantastic compared to the traditional way. So yeah, it's all about adapting, adjusting in order not to perish. That would be my answer.
I'll just add another point to that, which is we haven't talked about, which is slowing things down, is really the clear understanding of data privacy and data protection. And in Canada, mostly, we've been wrestling with open banking and the impact on that, and us as individuals and consumers. Banks hold all of our financial information. So I sometimes agree that we need to really look at this holistically. Working with the banks and FinTech technology at the same time. And I'd love to see more collaboration within some of those committees. I know I follow very closely Senator Deakin in Canada and his efforts to look at open banking as well as the open banking committees. But as we move that data, not just out of Canada, but across the world, definitely will create some interesting short-term barriers, but I think important to get this one right.
I'm going to just piggyback a little bit on exactly what Elizabeth said, which is, FinTech, disrupts the traditional core banking business right to its core. And it's tough to get support from the banking industry for any broad initiatives. They all have specific small initiatives on where they can save their costs. The broad initiatives of the power of FinTech in the long term is massive. And without the bank support, it's very tough to get the regulator support. So in Canada, we got the regulator support first, and now we've got to get the bank support, which we do not have yet. But we all know that all stock trading, bond trading, foreign currency transactions, and everything, all the biggest businesses in the world are going digital, and they're going FinTech, and they're going, blockchain. So just tough to get the buy-in sometime, but Chris, we're going to work hard, and I think Canada's got some good leadership here to work with the people from Hong Kong to make sure that they can become leaders in this space as well with us.
I'll add just one comment to that. If I look at the disruption in the manufacturing side came from Japan at the time of revolutionizing manufacturing models and started to hit hard on the profits of North American companies. North American banks are highly, highly profitable. True growth only comes when you hit painful moments and need to make critical decisions. So, bank shareholders are happy. So, there isn't that push to say we need to significantly restructure and innovate our business model.
All right, thank you, everybody. It's now 10 o'clock. I'd like to thank our esteemed panelists for taking part in our webinar today. I'd like to thank all the attendees for tuning in today. Please stay tuned for further events from InvestHK along with the organizers HK CVA. If you have any questions in terms of follow-up, I believe that both Michael and myself have left our email contacts in the chat box. Please feel free to jot them down or screen cap, whatever suits. And I hope everyone has a good day. So thanks again for everyone for taking part.
Thank you very much.